underscores the shifting dynamics of global finance. Russia has recently legalized the use of Bitcoin and other cryptocurrencies for international trade. This decision is primarily driven by the need to circumvent the extensive economic sanctions imposed by the United States and its allies. While this strategy offers Russia a way to sustain its international trade activities, it also signals a broader shift in the global financial landscape, one that could have significant long-term implications for the United States. Now, let's talk about the legalization of Bitcoin for international trade. Russia's decision to legalize Bitcoin for international trade marks a significant departure from traditional financial practices. Historically, international trade has been dominated by fiat currencies, particularly the US dollar, which serves as the world's primary reserve currency. However, the imposition of stringent economic sanctions has prompted Russia to seek alternative methods to maintain its trade relationships and economic stability. According to reports, the Russian government has enacted legislation that permits the use of Bitcoin and other cryptocurrencies for cross-border transactions. This move is part of a broader strategy to develop a robust financial system that is less vulnerable to external pressures and sanctions. By leveraging the decentralized nature of cryptocurrencies, Russia aims to create a financial network that operates independently of traditional banking systems, which are heavily influenced by Western economic policies. Now, the mechanisms of bypassing sanctions. Cryptocurrencies offer several advantages for countries looking to bypass economic sanctions. Firstly, the decentralized nature of blockchain technology ensures that transactions are not controlled by any single entity, making it difficult for external parties to interfere. Secondly, the use of digital currencies allows for greater anonymity and privacy in financial transactions, reducing the risk of detection and interception by sanctioning authorities. For Russia, the adoption of cryptocurrencies in international trade is not just a means of evading sanctions. It's also a strategic move to diversify its economic dependencies. By engaging in crypto-based trade, Russia can reduce its reliance on traditional financial systems and explore new markets and trade partners who are also interested in bypassing the US-dominated financial order. Reuters highlights that Russia plans to launch its international payment system using cryptocurrencies before the end of 2024. This system will facilitate direct transactions between Russian businesses and their international counterparts, eliminating the need for intermediaries and reducing transaction costs. Moreover, it will provide a level of financial autonomy that is critical for maintaining economic sovereignty in the face of ongoing sanctions. So, what are the implications for the United States? The increasing use of cryptocurrencies by sanctioned countries like Russia pose several challenges for the United States. The US has long relied on economic sanctions as a tool of foreign policy, using its dominance in the global financial system to exert pressure on countries that are not aligned with its geopolitical interests. However, the overuse of sanctions could backfire, leading to the development of alternative financial networks that undermine the US's influence. Number 1, erosion of dollar dominance. One of the most significant risks is the potential erosion of the US dollar's status as the world's primary reserve currency. As more countries adopt cryptocurrencies for international trade, the demand for the dollar could decrease, weakening its global standing. This shift could lead to increased volatility in the currency markets and reduce the effectiveness of the US monetary policy. Number 2, the loss of US financial leverage. And this is a big one for the United States, and I think one that the US fears very much. The US leverages its control over the global financial system to enforce compliance with its sanctions. Cryptocurrencies, by their nature, operate outside of this system, making it more challenging for the US to monitor and control international financial flows. This loss of financial leverage could diminish the effectiveness of future sanctions and limit the US's ability to influence global economic policies. 3, geopolitical realignments. The adoption of cryptocurrencies by Russia and potential other countries could lead to a new global alliance based on mutual economic interests. Countries that are similarly affected by the US sanctions, some of which you already know, may band together to create alternative financial networks, which are already in the works, reducing their dependency on Western financial institutions. This realignment could shift the balance of power in international trade and finance, challenging the traditional dominance of Western economies. So what is the future of global finance? The legalization of cryptocurrencies for international trade by Russia is a clear indication of the evolving nature of global finance. As countries seek to assert their economic independence and mitigate the impact of sanctions, the adoption of digital currencies is likely to increase. This trend could lead to the development of a more decentralized and multipolar financial system, where multiple currencies and financial networks actually coexist. However, the transition to such a system will not be without its challenges. Regulatory framework, technological infrastructure, and market acceptance are critical factors that will determine the success of cryptocurrencies in international trade. Additionally, the environmental impact of cryptocurrency mining and the potential for illicit activities must be addressed to ensure the sustainability and security of this new financial paradigm. In conclusion, Russia's use of cryptocurrencies to bypass US sanctions highlights the dynamic and rapidly changing nature of the global financial landscape. While this strategy offers immediate benefits for sanctioned countries, it also poses significant challenges for the United States and the broader international community. As the world navigates these changes, the need for innovative solutions and collaborative approaches to global finance will be more critical than ever. As always, prepare yourself for the changing world order. Till next time, bye for now.